Did you know your savings account could be losing money every single day, even if you never spend a cent? It sounds crazy, right? But there are invisible forces at play: inflation and taxes that are silently shrinking your hard-earned wealth. So, how do you protect your money and secure your financial future? Let's break it down together in this 16th episode of our Financial Independence series. Stick around because what you learn today could change how you manage your money forever. What exactly is inflation? You've heard the word thrown around on the news, but what does it really mean for you? Simply put, it's the reason why a coffee that cost you $3 a few years ago now costs you $5. Inflation is the gradual increase in the price of goods and services over time. Think about it. Your rent, your groceries, your gas, everything gets more expensive. Historically, we see an average inflation rate of around 2 to 3% per year. That might not sound like much, but over 10 or 20 years it adds up significantly. This means the money you have saved in the bank is losing its purchasing power. Every dollar you have today will buy you less tomorrow. This directly impacts your retirement plans, because the nest egg you think you need might actually need to be much, much bigger. Now, let's talk about the other silent partner in your wallet: taxes. Nobody loves them, but they are a fact of life. Taxes affect nearly every part of your financial world. They reduce your take-home pay right from your paycheck. When you sell investments that have grown in value, you'll likely owe capital gains tax, even when you start withdrawing from your retirement accounts. Guess what? The taxman will want his share. Your property, your income, it's all part of the tax system. And when you combine taxes with the rising cost of living, it creates a powerful duo working against your savings. The cost of living isn't just one thing. It's a mix of your biggest expenses: housing, food, transportation, healthcare, and education for your kids. All of these costs tend to rise over time, often faster than our paychecks. Have you ever felt like you're running on a treadmill, working harder just to stay in the same place? That's the effect of taxes and a rising cost of living. Without a solid plan, it's easy to fall behind. So, how do you fight back against these invisible forces? How do you protect your money and make sure it grows instead of shrinks? This is where a smart strategy comes in. First, you need to invest your money in assets that have the potential to grow faster than inflation. Things like stocks and real estate have historically provided returns that outpace rising prices. Simply leaving all your money in a savings account is like parking your car in a lane that's moving backward. You also need to be smart about taxes. Use tax-advantaged accounts like a 401k or an IRA. Contributions to these accounts can sometimes beat, and your money can grow tax-deferred or even tax-free, depending on the account type. It's also wise not to keep too much cash sitting around long-term. Have an emergency fund? Yes, but any extra cash is just losing value to inflation. Another powerful move? Increase your income. This could be through a side hustle, learning a new skill to get a promotion, or starting a small business. More income gives you more power to save, invest, and stay ahead. Finally, you have to review and adjust your financial plan every few years. Life changes, and so do your goals. Stay flexible and adapt. Let's look at a real-world example to see just how powerful inflation is. Imagine your monthly expenses right now are about $1,000. If inflation averages just 3% in 10 years, you'll need around $1,340 to cover those same expenses. In 20 years, you'll need about $1,800. That's almost double. This shows why just saving isn't enough. Your money has to be working for you. Now, let's talk about your investments. Let's say your investment portfolio grows by an average of 7% per year. That sounds great, right? But you have to subtract the impact of inflation. If inflation is at 3%, your real return, the actual growth in your purchasing power, is only 4%. That's 7% growth minus 3% inflation. Understanding this simple math is the key to building real, lasting wealth. You have to beat inflation, not just match it. Inflation and taxes are not going away. They are permanent features of our economic landscape. But here's the good news. You don't have to be a victim. By understanding how they work and creating a smart, proactive financial plan, you can stay ahead of the game. It's about making your money work harder for you than inflation and taxes work against you. It's a marathon, not a sprint. But with the right knowledge and consistent action, you can build a secure and prosperous future. Thanks for tuning in today. If this helped you, make sure to follow or subscribe for more practical financial tips. See you in the next one.